Hey traders, Nick Shaheen here looking at Ford. So this is a daily chart, which is what everybody looks at. Incredible trend. It's ping-ponging inside of a very clear channel. They're going about above and beyond the so-called somewhere in the middle lies the truth. So this is a regression channel. I don't draw it, it's drawn automatically. And they're ping-ponging exactly how they should be. A little bit above it, a little bit below it, and when they overshoot, they recover, and then overshoot, and then recover. So here they are bouncing off the overshoot in the bottom. So is this clear sailing up to here? No, it's not. It could be, but the story is a little more complicated. First, let's take a step back and talk about the fundamentals. They're in shambles. Yes, pandemic, etc. Get it. It's tough. But their P&L and their balance sheet, mostly their P&L that I looked at, went downhill a lot worse than GM did. So something GM did better than them. I don't know. I'm not an expert in the car P&Ls, but I am an expert in cars. I race them, and my son builds them. So he builds trucks. Unfortunately, he does not like Fords. He's a Chevy guy. He would drive a Ford if it's in the 70s, old, and a stick shift. The newer ones, he's not a fan. He prefers the he just got his dream truck, a used 2006 and a half Duramax. So diesel, fully loaded. That's his ideal truck, and he's 19. So anyway, so the Ford stock is doing a lot better than the P&L is showing. So therein lies some risk. So there's a disconnect between what's going on in their financials and what's actually going on in the stock. But that makes somewhat sense because the stock market is setting records. 423 today, we just set a record in the SPY. On no new news, just buying the dips, and that's what's happening here. They are buying the dips. So I sound like I'm bearish, right? So I'm going to take you back to where I got long Ford, and I shared it with the followers. So there is a chat room that's open all day, and I have almost 300 people in there, and they get 2 newsletters a day and a write-up on the weekend and a whole bunch of iron condors. And there's a link to the chat room down below. And it's not free to be in it, but it's free to try it out for 10 days. It's a PayPal transaction for $0. You've got 10 days to cancel. Check it out if you're nice. If I don't want jerks in there. So the way we got long is using a monthly chart. What? Yes, a long term. Every candle is 1 month. I did this with Snap when it was like in the 12s, and then I said it's going to 18, and it went well beyond that. So here were the lines that got us long. There was a huge, long-standing downhill, and it got there was a sharp point that they needed to get above with a higher low trend, and this is about where I said, you know what? I'm going to bet on Ford's recovery into 2021, and that was like, I don't know, fall of last year. I'm buying a call for March, I think it was. It was 70 or 80 cents at the time. It turned into bucks, and look at where it went. So that was a home run. So I'm a fan of the stock from where it was an easy in. Here, I'm saying it's not an easy in. So these are monthly candles. Every candle is a full month. For example, this month, this is April. They opened here. They tried to rally at some point. They hated it at some point. And now they're back to where, you know what? I have no idea. That's what they're saying. And we're back to where we opened the month with a week left. Where they go with it, I don't know. But you have to pay attention to the top and to the bottom. So those are the 2 big line for the month. 13 and whatever that number is. 11.3, let's say. So that's the big picture. Smaller picture, we were looking at the daily. I'll take out the lines because they're kind of messy up close. All right. So where's the risk? The risk is this number right here, where I had 11 point something. If they lose that, it becomes a bearish pattern. It's a head and shoulder-ish pattern where they're fighting over a neckline. Look, they broke out from it here. They tested it for footing, and they tested it again this 3 days ago, and today they're up here. So if they hit a snag and they come back for whatever reason, to no fault of its own, the whole market is extended. So what if the whole market corrects and they lose that? Let's say they lose that. They lost the neckline, and then the bears overwhelm the bulls. The bulls will try one more time, and if they fail, they're going how far? The technicians will tell you as big as this. So that's a pretty big dip, right? So that puts us like somewhere down here. I don't want to argue with that, but I'd say I bet you there'll be buyers in here, like strong buyers around 1050 and around 10, and really strong around 950. So I'm going to say long with an exclamation point. These are notes to myself. So I can't watch everything at one time, even though I have hundreds of people that tell me, hey, look at this, look at that. I have to make notes, and then when the trigger happens, I'm ready. If it doesn't happen, so be it. It'll happen at some point, I guarantee you that. So on the upside, good news would be if they cross 1250. That's a prior fail. Another prior big fail is 13, that guy right there. And above here, there's basically open air for a while. Not quite open air, because this is, remember, coming from really higher levels. All this is going to be like a huge problem for them whenever, if ever, they come back to here. So this is the trigger we were just talking about. And what's it look like? I showed you earlier on the shorter term how it's going to be a bearish pattern if they lose that little level. Well, this would be the trigger for a bullish pattern on a very slow basis. So this is a neckline where they fought over, then they lost it, right? And then they couldn't take it out. And then it took them 2 years, 3 years to come back to here. It's okay to fade. It's okay to fade even down to here. That wouldn't change anything as long as they eventually come back and take this out. However way they want to do it. This way, this way, this way. I don't know. But mark this. I did. When this is taken out and they confirm it, they're gone. How far? Well, if they told us on the way down it's going to be this big, on the way up it should be that big too. But just like on the way down I said, I bet you there'll be buyers here. I'm going to say, I'll bet you there'll be sellers here, here, and somewhere under here, and most definitely up here. So it won't be easy, but that would be the big trigger. So this is where I either wait for the trigger and chase it, or buy the dip. Do you hear that? So in the middle, for me, there's nothing to do. I'm going to go back to the daily. In the middle, there's nothing to do. I need, I usually say NT, no trigger, no trade, but I also say no thesis, no trade. So if somebody has a thesis, if they know something about the car, something coming, I think it's going to go up as not a thesis. I think it's going to go up because they have a new line of blah, 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 blah. Then that's the thesis. And then you track your progress on that thesis. If the line doesn't come, if the line comes and nobody cares, then like I thought the Bronco line was going to be great, but I don't know if it is or not. It's too young. So shorter term, there's going to be sellers. So I don't want to chase it into where I think there's going to be sellers. So I'd rather see it fall back to where it came from and buy it. So if it falls close to that scary trigger, I would get long and put a stop. So then this note becomes get out, not get long, because I already got long. So if it comes back here, people are going to be scared. I'll say, you know what? It just bounced. I'll try to get long and then stop below it. So what if I lost a little bit? That's how people trade. You're going to risk something. But if it dips and I buy it, now I have a chance to ride it all the way back up. Even if it hits resistance, then I already am long. But chasing it up here, I'm late to this party, in my opinion. These sellers are lurking. Same as these. So buy the dip with a tight stop. Get that part? Or wait and buy the rip. Which one? Depends on how fast you trade. This is one, and that is one. So if I'm a fast trader, I can react fast. I can go off of 1250. If I'm slightly slower, I need 13. Or if I'm really slowpoke, then I should wait to here. But it depends on the person. All right, so these are my thoughts on Ford. So fundamentally, the story is not that great. It's better in GM from a scoreboard. I'm not judging them. I'm telling you, profit margins, the orange line in GM is not like this. Debt levels is not like this. This orange line should be dropping. In here, the debts are rising faster than the assets. The cash from operations is still healthy according to this, although this sounds pretty high. I don't know if that's correct. But there's no warning signs except for the fact that they're bleeding. So GM is still cranking out billions of cash and profits. These guys are bleeding. Like there's no PE. The GM's PE is like 13. So therein lies some risk. But that's not the problem here. The price action is the problem for me. And right here, there's nothing to do. It's either higher and chase it or buy the dip. That's my opinion. I'm sticking to it.